Welcome back to Insights Now. I'm Gabriela Santos, Chief Market Strategist for the Americas at JP Morgan Asset Management. Federal government regulatory policies have the potential to reshape both the economic landscape and the investment opportunity set. And both candidates for president have expressed strong opinions on regulatory issues. However, their attitudes on regulatory oversight appear to vary across industries and issues that are affecting the economy and society. In addition, their power to actually implement regulatory change is limited both by political realities and the courts. For investors, we've always said it's important to remember that it's policy, not politics, that matters most for markets and the economy. However, history suggests that even regulatory policy might not always impact markets in the ways that we would expect. To dive deeper into proposed regulatory policies and their potential impacts, I'm excited to be back with Dr. David Kelly, our Chief Global Strategist here at JP Morgan Asset Management. David, welcome back to Insights Now.
Glad to be here.
David, when looking at traditional party ideals, Republicans have usually been in favor of less regulation relative to Democrats. Is this still the case today?
I guess on the margin, I'd say yes, but I think it does really vary across, what sectors you're talking about. If you look at the financial sector, if you look at perhaps the technology sector, you look at the energy sector, then Republicans would clearly be in favor of less regulation. Also in environmental areas, I think Republicans are generally in favor of less regulation. But then if you look at areas like, healthcare, a lot of Democrats would argue, well, why are you regulating what my doctor can do? Or if you look at immigration, how much do you want to force companies to do various pieces of paperwork on who exactly is working for them, or on tariffs and trade restrictions? If you're very aggressive on trade policy, it's not just about tariffs. It could be about you've got to have this import content, that import content, or that domestic content. And I think also Republicans used to be regarded as the friend of the business sector in general. And now I think much less so in terms of the big business sector. So I think it's a much more nuanced picture right now.
That's a good point. It's not so clear-cut anymore.
Mm-hmm.
Where do you see the two major candidates standing, specifically when it comes to tech regulation, which has certainly been in the news quite a lot?
Well, I think both candidates want, see the United States as being a tech leader, and I think they would want to encourage that. I think that where we get into some nuances here is I think both parties want to make sure that, protect U.S. dominance in tech to some extent. And so I think there will continue to be restrictions and regulations for whoever wins on, for example, technology trade with China and the freedom of U.S. tech companies to do whatever they want in terms of trading perhaps sophisticated technology. In addition to that, I think they have a slightly different view when it comes to information technology and you can what you can put out there. I think earlier on this year, President Biden announced last year, he announced a pretty significant initiative in terms of trying to regulate AI going forward. And there weren't a lot of regulations involved there, but there certainly was a lot of studying and orders to study how is AI going to evolve and what safeguards are necessary to prevent political misinformation or attacks, cyber attacks. And there's so many other dimensions to this. I think the Republican perspective right now is obviously I think there is some concern about what the long-term future for AI is, but there is a definite pushback on anything that might seem as censorship, even if it's censorship of what might be deemed by the other side as disinformation. So former President Trump is clearly arguing for, don't restrict what people can put on Facebook, or on Twitter, or on X, or on any other social media outlets, whereas I think the Democrats are more in favor of trying to control or restrict some of the information flow coming from that. And then there are other areas. Former President Trump has recently embraced the crypto industry. I think the Democrats are generally more skeptical of that, although Vice President Harris has also talked about an expansion of the crypto industry. So I think that there are nuances to all of this, but I think both parties want to think about it in terms of a national security perspective, but they have quite different ideas when it comes to the free flow of information coming out of technology companies.
But it does seem like tech is going to still be very much top of mind for the White House, for Capitol Hill, around a lot of these economic and societal issues.
Well, absolutely. And tech companies are big companies, and they're big profitable companies. And if you're a big profitable company, there's always a little bit of a crosshairs on you.
Absolutely. What about healthcare, David? That's traditionally been a sector also at the crosshairs during election years.
Well, it has. And that's one of the interesting things. If you go back to 2016, it was, the Affordable Care Act, which was, then much more popularly called Obamacare, was really at the center of the political debate. And former President Trump, when he was campaigning, then talked about let's get rid of Obamacare and eliminating Obamacare and eliminating the mandates. Now, they did get rid of the financial penalties for not having insurance. But since then, it's really interesting. We've seen a huge expansion in the number of people who are insured one way or the other because of the Affordable Care Act. There's something like 45 million people today who are receiving some healthcare coverage because of Affordable Care Act subsidies. In addition to that, if you go back to the 2016 election, at that time polling showed that 45% of the people disliked Obamacare, were not in favor of it, and 43% were in favor of it. Today, over 60% are in favor of it, and only 37% against it. So it looks like that in this area, there probably will be much less attempt to push back on what's already in place. But again, the Republican position tends to be we don't want any mandates on what people can do, and we also want to give insurance companies flexibility as to what benefits they can offer. And of course, that runs into, well, you can't actually do both those things and maintain coverage of pre-existing conditions. So there are contradictions still that need to be ironed out here. But I think there's going to be much less of an aggressive move to get rid of the structure of the Affordable Care Act than we saw in previous elections.
Incredible. The attitude seems to have changed quite a lot there. Yeah. Healthcare does come up, I suppose, in terms of the discussion around how expensive it is to live in the U.S., but certainly very different approaches as to how to fix it.
Well, yes. And I mean, one of the pieces of good news on inflation is that medical inflation has really come down a lot. One of the pieces of bad news is that it is really hard to get a primary care physician or a specialist if you actually need them. It's not quite as bad as in some other countries, but it's certainly the waiting, the waiting lines to try to get care are increasing because there's a huge growing need and growing capability of the medical industry. But there just aren't enough educated people in the industry to service all that need.
Yeah. Switching gears, David, to financial regulation. How do you think a Harris administration versus a Trump administration would tackle financial regulation, and how would they think about M&A, for example, going forward?
Well, I think both parties, and this is really getting back to what I said initially, historically you would have said the Republicans will be, in favor of much more anything goes in terms of M&A, and the Democrats will be much more restrictive. Actually, I think both parties have a quite suspicious mindset when it comes to monopoly power and mergers and acquisitions. And so I think that whoever wins in November, we're going to see continued relatively aggressive action to prevent sort of the formation of monopoly power, the maintenance of monopoly power. And I think a lot of questions will be asked on that. So I think that's an area where there's some agreement. I think in other areas, the Federal Reserve obviously has been allowed to do its own thing to a large extent. I think that'll probably continue. I think when it comes to the SEC, I know former President Trump has vowed not to reappoint the current SEC chair. We'll have to see how this plays out. But there are some questions about who a new Trump administration, where they would want to favor people or not favor different groups. And we'll have to see how it plays out. But it's really not clear. And of course, we talk about policy positions, but a lot of this is, trying to pull a line here or a line there from a speech to try and figure out what the real policy position is.
Hopefully we'll hear a little bit more about it. What struck me about M&A is also the two parties seem to be very focused on that idea of economic nationalism or of restricting ownership by certain foreign governments.
Well, yes, part of it you can understand, and then part of it as an economist you say, well, how key is this industry? I mean, there are some industries like building advanced chips where it's kind of nice to do it here. There's some industries where are you just doing this because, the name sounds good, or you don't want some foreign country or foreign nationals owning this particular well-known asset in the United States? And it does seem a little bit more political than economic.
Yeah. Speaking of another policy area with regards to EVs, electric vehicles, and renewable energy, there were a lot of provisions in the Inflation Reduction Act that was passed through Congress a few years ago. Do you think they would be repealed under a Trump presidency and a Republican Congress?
There may be some pushback. I think that's possible. I think it's sort of interesting the position that Elon Musk has been taking recently. I wonder how that factors into all of this. But I think more broadly, again, it gets to the, once a policy is in place and people are beneficiaries of it, it becomes hard to repeal. And a lot of the provisions of the Inflation Reduction Act is actually money going to states that normally vote Republican to enable a transition away from carbon footprint and more towards more green technologies. And so it's questionable as to whether members of Congress from those states will really want that to be fully reversed. We may see some pushback. I think what we will more likely see is, rather than reduce the subsidies to green technology, it's much easier to say we're going to get rid of some regulations which are restricting the growth of fossil fuel. And so you may see, for example, drilling up in Alaska again, even though it would take a long time for expansion of Alaskan drilling to actually have any impact on oil production in the United States. But in general, you may see we've seen rising oil production in the United States, but you might see even faster long-term increases in oil production if you have a more hands-off policy with regard to fossil fuel extraction.
And David, we've spoken about policy towards energy, both traditional and clean. We've spoken a little bit about financial regulation, healthcare, as well as technology. However, what are the actual limits with regards to the ability of the next president to change the regulatory landscape across all of these different sectors?
There are some limits. I mean, first of all, there's the obvious political limit that if you have divided government or if you've got a narrow majority of one party or another, you are quite vulnerable to pushback and roadblocks from Congress on this. Now, a lot of these regulatory policies can be done by the agencies or by executive order or executive action. But there was a very important Supreme Court case over the summer which restricted the ability of federal agencies to make these sort of blanket regulations without pushback from the courts. The court, traditionally the courts had some deference to what the agencies were saying, and the Supreme Court ruling was basically, you don't necessarily have to have that deference. You need to look at it. If it's not clear and Congress needs to say something else, then Congress needs to say something else. So it may actually push more power back from the executive branch back onto Congress, and that may restrict the ability of either president, whether it is President Harris or President Trump in January, from doing all they want to do in the regulatory space.
That's such a good point. I think perhaps people might have missed that important Supreme Court decision, and this is going to be the first time we'll actually see how it's implemented day to day. Imagine, David, if we knew the outcome of the election, of the president, of the composition of Congress, we imagined or knew the exact policies that they intended to implement and how they would or would not be allowed to happen. How should investors actually change their sector allocations based on these different assumptions?
I'm going to start with the fact that there are an awful lot of ifs in your question. But I think that's kind of the point. I mean, first of all, today, I wouldn't do anything because I think it is a toss-up as to how this election is going to go right now. We simply don't know. And so you don't want to make a bet based on the idea that you've got some superior knowledge on this because it is so uncertain. But beyond that, I think you have to be very careful and very thoughtful about this. I mean, for example, in the area of energy, you would think that given how much the fact that the Republican Party has tilted more towards fossil fuels and the Democratic Party has tilted more towards green energy, that green energy stocks would have done better under the Biden administration and fossil fuel stocks would have done better under the Trump administration. Actually, the opposite is the case. And if you did have a big expansion, for example, or big deregulation within the energy sector, and that resulted in more fossil fuel production, you could end up tanking the price of oil and therefore tanking the stocks of companies that produce it. So it's not always clear just because you sort of favor less regulation in industry that you're actually going to help the profits of that industry. And so I'd be pretty careful about it. I think people need to be pretty nuanced. First of all, they need to recognize the uncertainty of the election outcome itself, but then also be careful about what you assume about what these regulatory changes might mean for the actual winners and losers in the stock market and the bond market.
Such a fascinating example. David, thank you for joining me today. On our next episode, join David and I for a discussion on monetary policy and the Federal Reserve's independence. Until then, check out our Election Insights Hub at jpmorgan.com/elections for more timely election content. To all our viewers and listeners, thank you for tuning in today, and we'll speak to you soon.